Which is the best cruise ship stock to buy? Royal Caribbean, Carnival, or Norwegian Cruise Line? I'm going to answer that question in this video comparing the three stocks across 5 different metrics. So let's get right into it. Starting with revenue. Now looking at revenue, you notice that Carnival is the largest of these three cruise companies. They had revenues of more than $18 billion at the peak. Of course, the pandemic caused travel to a halt and the cruise ships were prohibited from sailing and they had to shut down operations, and that caused their revenues to collapse completely. And only recently, starting 2022, did they start to recover. And boy, are they recovering. Look at that bounce back for these cruise companies as consumers unleash this pent up demand for travel. This is where people are diverting a lot of their spending since 2022. No more spending on streaming services and big screen TVs and laptop computers. That's mostly changed to spending on travel, on hotels, on cruises, on bars and restaurants, on concerts and theme parks and ball games and all these things that we do outside of our house, right? Just get us outside. And that's what these cruise companies are benefiting from, snapping back their revenues explosively. And, if you look at Carnival, it's, it's about 6 billion away from its peak. But if you look at Royal Caribbean, it's only a couple of billion away from its peak, and in fact, it's about back to where its revenues were like in 2018. So it's recovered significantly in a very short amount of time where it was before. And another key aspect of this is that they've all been able to raise prices meaningfully, right? Inflation has helped travel companies, hotel companies, because they've been able to raise prices to capitalize on the pent up demand. So even though there's still, if you think about the total numbers of people booking trips on cruises, that still hasn't recovered to pre-pandemic levels. That still hasn't recovered. But the total spending is almost back to where it was to pre-pandemic. So the spending level is recovering faster than the quantity of people traveling, and the difference is due to much higher prices compared to before the outbreak. So the next metric I wanted to compare these companies on is cash flow from operations on a quarterly basis. And again, if you look at it ranking wise, Carnival was the highest ranked in terms of cash flow from operations, over $1.5 billion. And that makes sense because they're generating the highest amount of revenue. So it would make sense that they would be at the highest amount of cash flow from operations. But looking at the recovery from the pandemic, it looks like Royal Caribbean is doing a better job getting its operations back online, back to being a cash flow positive. Because look at this. They've got the highest cash flow from operations, and they've been having the highest cash flow from operations ever since, I would say, the middle of 2021. They've been doing the best job in slowing the cash flow losses and then bringing it positive when consumer demand bounced back. And so they've got 576 million in cash flow from operations. Norwegian was the next at 236 million. Meanwhile, Carnival is still operating at significant losses of 117 million in cash flow from operations, although they are also making very good progress. Look at the worst, they were losing nearly 3 billion in cash flow per quarter, and that's been up all the way up to just losing 117 million. So they've all made tremendous progress, but right now, Royal Caribbean doing the best job in cash flow from operations. The next metric I wanted to look at is operating income quarterly again. And before the outbreak, Carnival had the significant advantage in this metric. After the outbreak, after COVID, after the reopening, looks like Royal Caribbean again doing the best job on this metric, and the only one among the three that's profitable in terms of operating income at 16.6 million. Norwegian losing 280 million in its most recent quarter, and Carnival losing a whopping 1.1 billion in its most recent quarter. Another thing I wanted to look at across these three companies is debt, because like I mentioned, the pandemic was devastating for these companies. They were losing billions in cash flow, billions in profitability, and so they had to go and borrow money as well as raise capital through equity sales. And looking at this, so I wanted to look at who borrowed the most money and where total debt stands. And looking at this, you could see Carnival nearly tripled its debt from about 11 billion before the outbreak all the way up to 34.5 billion. Royal only had to nearly double its debt from about 12 billion to 24 billion, 23 billion. And Norwegian had to nearly double its debt too, from about 7 billion to 13.6 billion. But the worst in terms of managing debt is Carnival, and maybe because it was the largest, it needed to borrow more. It's more difficult to start and stop an operation that's bigger, right, than it is to start and stop an operation that's smaller. And so Carnival had the more negative consequence because of its size. And the total debt now 34.5 billion. This is troubling because interest rates are going up. So the interest cost on this debt is going to remain elevated. So even when they go to refinance this debt, of course, it's probably going to be at lower rates than they had to take on the debt, because they were a much riskier company when COVID was still in its in the earlier stages than it is now when their operations are back up and running. But still, since then, interest rates have gone up. So that delta between the interest rate they paid then and the interest rate they're going to be able to refinance at is not going to be that much lower. And finally, to make the decision which one of these three stocks is the better buy, I wanted to look at their valuations. And looking at these metrics, Royal Caribbean is the most expensive at 10.42, followed by Carnival at 9.6, followed by Norwegian being the cheapest at 8.268, measuring by the forward price to earnings ratio. All right, so given that Royal Caribbean is not that much more expensive than the others, and given that it performed better in terms of operating income and cash flow from operations, it's doing a much better job in those two metrics. And I'm not having to pay that much of a premium to buy Royal Caribbean stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would say that cruise stock is the best one to buy right now, Royal Caribbean. If you want to capitalize on the recovery of consumer travel demand and you want to buy a cruise stock, out of these three, it should be Royal Caribbean. All right, that's all I've got for this video. If you enjoyed this one, I'm going to add links to the few more videos that I did to the end of this one. Please click on one of those and I'll see you over there. Thank you for watching.